Hello there, Maverick traders. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Currency Room, and look at that. May is done. May has been closed. We will take balances, we'll do the accounting, and send out payouts early next week, which means we are now looking forward to the June period. In this session, we're going to talk about the news of the week. We're going to go through all the currencies, score them from +3 to -3 on a trend and velocity, and then that's going to tell us where to hunt for the week.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Let's start off with equities. So equities actually were creeping up at the end of the week up to the high end of the high base. And actually the NASDAQ poked its head out a little bit above it. We're going to say they still remain range bound, but we'll take a look at the charts. You'll see that they are knocking on the door for a breakout. We heard from both the Bank of Canada and the ECB. No change from the Bank of Canada, which was as expected. The ECB cut rates by 25 basis points as expected, but everyone was thinking that this was going to be it for the ECB. We got a really weak inflation number out of both Switzerland and the EU that's actually putting that question into being challenged. So we'll take a look at these currencies and see what's going on. And then let's just talk about cryptos. They continue to weaken. I talked about how they've really broken down below their bases and we no longer are as interested in. Ethereum had a decent week, but let's go in to see what actually were some of the economic news for the week. On Monday, we got our first manufacturing report. So on Monday, we got the manufacturing, and then on Wednesday, we got the ISM services manufacturing. Take a look at both of these numbers out of the US. These are weak numbers. Not only were they worse than expectations, but they are significantly worse from last month. The equity markets didn't seem to care about that. They didn't seem to care about that weakness whatsoever. Let's go ahead and just stay with the US news here. Unemployment claims are going up. If you remember about 2 months ago, we talked about how everyone was worried about the recession coming, and I said the unemployment claims were sitting at 220. They just weren't going up. They're finally starting to come up. And so the question is, does that mean that employment is actually going to tip over? Well, we got the employment report on Friday, and you can see that it was a pretty good number. And not just that, the last couple of months were revised significantly higher, showing that employment in the US is still really good. I've got to say that I am surprised with how well the US economy has hung in there. Look, it's not going gangbusters, but it's definitely just hanging in there. Anka, does this surprise you?
Yeah, definitely. I think this report today was a big surprise to me. Again, we talked about, wait for the data to weaken, and we got it this week. I mean, ADP were way off. You can see it was 37,000 versus the 111. So you can see that was a big miss or discrepancy from the non-farms and the ADP. But we also got the ISM services PMI that was below 50. The 52. Like we are seeing some of the data start to come out a bit weaker. And same thing out of ISM manufacturing PMI up there on Monday. That was at 48.5 as well, instead of 49.3 expectation. So, we saw all that. And, that's why I was kind of surprised when we got this beat today in the employment report. So, we talked about, is there a delay from, the tariffs and when this really trickled down in the economy? It was looking a lot clearer to me till today. And then, we definitely saw the bond yields, they shot up because, again, traders are easing off bet. I think earlier we were looking at a rate cut in July. Now I think I'll push till September. As far as the expectation go, the equity markets broke out higher. So Today was definitely a bit of surprise to me. So we'll see what happens in the coming weeks, what the economic data tells us. But this week was a bit of a mixed bag here.
Yeah, lots of US data, but let's cover two other reports. GDP out of Australia was much weaker than expected. It's supposed to be zero point 0.4, came out of 0.2. Guess what? The Aussie went higher on the news. And then we got Canadian employment report, much better than expected. And the CAD really didn't move on that at all. So let's go in and take a look at the final numbers of last week, and we'll talk about this week and put it to bed. At the end of the week, the equities had climbed higher. As you can see, the S&P up 1.6, the VT up 1.7. Crypto took a little bit of a break. Gold only up 1%. That's usually a big week in gold, but not lately. Gold's been very, very volatile. And then oil, big jump, 6% in the price of oil. Let's take a look at the S&P chart, and you can see Friday's candle. The first 4 days of this week, we got lousy economic news. Now, we did get one thing happen that really held the market up, was that President Trump and President Xi from China actually had a meeting to get the negotiations back on track. The China tariffs are probably the biggest deal in the market, and the fact that those are looking to be back on track is why the equity markets held up so well. But take a look at it. We poked our head above that resistance. We are really getting close to all-time highs in the stock market, even though this economy is not going gangbusters. What did that mean for Forex? Well, we saw a risk-on move across the board. We saw Aussie, Kiwi do well. The pound has been one of the risk-on currencies. It's not like it had a great week, but it was an up week. And then what was negative? Well, we see that the safety currencies were all negative. Swiss franc, dollar, with the yen being the weakest. The question is, if this market keeps breaking out, does this correlation stick? Do we see the Aussie and Kiwi finally get strong when the equity markets get strong? Cryptos had a pullback across the board, 1%, 2%, really nothing to discuss about this. That's a pretty mild pullback for cryptos. We'll take a look at the crypto basket here in a second. Ankit mentioned the bond yields spiking up on Friday, and sure enough, we had come up to this 4.6%. I said anything over 4.6%, equities are going to hate it. And you can see we backed off substantially, all the way down to 4.3. We're back to 4.5. The market is totally fine with yields between 4.1 and 4.6. And in fact, I think not just fine, but they're very happy to see them just stuck here. Unless we break out above 4.6, I don't think there's really going to be much pressure on equities or the dollar whatsoever. Taking a look at cryptos, and I talked about this, is that we're now at the bottom end and we broke through the bottom of our range. Yes, we came down and we touched this 50-day moving average and we got a bounce off it, but there's a lot of technical work that needs to be done if we want to get long in cryptos again as a whole. We'll take a look at some individual charts here, but cryptos, maybe they've turned, maybe they've bounced, but it's way too early on a technical basis for us to make any sort of technical claim that they have bottomed out. In the news next week, we've got UK claimant count change on Tuesday. We've got US CPI on Wednesday. Going to be another important one. We've seen these substantially below expectations for the last couple months. We'll take a look at this. We have UK GDP, so lots of news on the pound this week. And that is about it for the week. So I'm really looking at the pound this week. I like the chart on the pound. I also like that they've got major news announcements coming up to give them a little bit of oomph, a little bit of velocity to get moving. But that doesn't mean that these reports are going to come out bullish on the pound. So let's go ahead and take a look at all of the currencies we trade, score them from +3 to -3 on trend and velocity. First up, let's take a look at Bitcoin. All right, the chart on Bitcoin was a bull market. So here we broke up, we based, we got the crossover in the 20 and 50-day moving average. So at this point, everything is telling us, okay, Bitcoin is now uptrending. And sure enough, we saw runs, and then now we're getting this little bit of a 5-way pullback. It's broken through some of the support it should have held. It should have held this 105, 106 area. And you can see we broke below it. The good news is we did hold the 50-period moving average. So the 50-day moving average is held. It doesn't mean it's a great setup yet. It's still going down. It is still moving lower. We need to see a breakthrough, a retracement, and then look, we can look to buy that bounce. So that means we are probably a week or two off from even being able to see a bullish chart pattern develop in Bitcoin. Same thing across the board of Bitcoin Cash. Same story here. The only different story here in cryptos is that Ethereum is looking like it's basing. And it's still holding that base. You can see we have held onto the bottom end of that base, which is probably about 2,400. I still think, collecting it around this area, 2,500, if this thing is going to move higher, it's going to break out and have a nice move. Ethereum for me is really the only crypto that I'm looking at that I'm interested in. And you can see Litecoin has completely broken down technically. We have now broken below the 50-day moving average. This turned out to be a resistance on a bounce. And now we made a new swing low. Completely disinterested in Litecoin whatsoever. Let's move into the Forex.
All right, well, let's start with the US dollar. Well, I must say that this thing has been very stubbornly holding on to that level. And, I talk about this quite extensively in the currency midweek live class that we had this week. And I talk about how, when you are testing these support levels that are just stubbornly there, that's where you just need that confirmation. And you can see that we, tried multiple times to break it. And here we are just holding on to it. So until this really breaks lower, I'm very cautiously bearish on this. We have seen this rally in the past few times. At this point, I just don't have a strong call on the dollar. It's not really a great, short. It's not really a great long. It's just kind of stuck in there. So I think we can probably find better opportunities elsewhere. And I think that's what takes me to the yen. Yen actually had a nice move. And I know the yen has been a tough trade in the last couple of weeks too, because you can see that the nature of it was more back and forth. We have been moving, there's some decent intraday movements. So that's really where the movement is. But overall, direction hasn't been clear. But here we are, the last couple of days, it really went lower. So this is the one. The question is, do we break that support level that we had established in May? And if it does, then this would qualify for a directional trade. But again, just keep in mind, look at those moving averages. They're kind of going sideways. And whenever you see these moving averages flatline, this is where I think it gets a little bit difficult to really catch that traction. And suddenly you get that movement. So yen is looking pretty good here. Next week, again, looking for continuation pattern before, and see if we can retest that support level. But this is the one that looks the best to me on an intraday opportunity. Now, when we talk about these candlesticks, take a look at how small percentage moves are in some of these currencies. Look at Swiss franc. We had much better movement in April where we had those big candlesticks. But take a look at where we are. If you are trading Swiss franc and finding frustrating, again, look at the pattern of it. So unless it really breaks higher or lower, I got no interest in playing this Swiss franc till I get that breakout. And if you take a look at euro, very similar situation. Now, euro also had the ECB that cut the rates. Well, had no impact on euro. So I think euro, this is just what we call a holding pattern. It's the tighter moves, and then we get the big moves off of it. I think it's just gathering energy, and who knows when they will break out. But the best thing we do is set alerts above that support and resistance level. And when we get that break, I think that would really charge some of these currencies. And then if we go into the pound, I agree with you, Rob. Like pound did come back as a pullback, and in the past, you can see this pullback has been good buying opportunity. So as long as it really holds that 20-day moving average, I'm okay with it. If it breaks that, then I need to reevaluate. So this is where I am at. I think this is the good point where it should rally for a continuation pattern. But again, we have the economic data next week. I think that could impact. It could really, provide a catalyst higher or lower. But I think pound will be definitely an interesting one going to next week. Now we're talking about currencies that are going sideways. Canadian dollar, another currency. You can see that when you see things go flatline, these moving averages, this is why I've kind of given it a 0. We don't want to take a look at above a lower those moving averages because it just gives you conflicting scores. But overall, you can see pretty clear this is going sideways. So Swiss franc, euro, CAD, they're all in the same category. But let's go into the Aussie and the Kiwi. So you can see that just like the European currencies, this Aussie has been very awfully quiet as well. I mean, take a look at those candlesticks as well. It's a very slowly, going in that consolidation phase. So as Rob said, I agree. When we start to see broader markets really become active and we're seeing breakouts, could that price action spill over into the currencies? I mean, traditionally it should. Like that's what we really see is this risk sentiment really start to affect the currencies. But this is the one I would say mildly bullish. Maybe overall, just keep in mind that this thing is also range bound. But if going to next week, if we really start to see growth currencies pick up, I think it will be definitely worth taking a look at it. You can see that the velocity was definitely there today. I just need to get a better percentage moves on a day-to-day basis. And then lastly, the Kiwi, same thing. We talk about correlation. I mean, take a look at this one. This thing is going flat sideways. So, I mean, I actually don't remember, Rob, last time we saw this many currencies going this kind of sideways price action. But this is, again, same thing. I would love to play a breakout to the upside off of it, but I need a confirmation, just like how we saw on dollar. It can be stubbornly holding that support. This is stubbornly holding that resistance, even though we had many catalysts that could have really broken this out. So being patient in a lot of these currencies that are not showing a whole lot of direction and only focus on things that are really showing direction. Like we talk about yen, we talk about dollar. Those are the ones that are moving. Dollar yen pair has been a good trading pair for the last 2 3 weeks where we're getting a nice more than 1% change. But outside of that, I'm not really seeing a whole lot of opportunity. So we'll see what happens next week. And if we see a breakout, we definitely want to take a closer look at it. Back to you, Rob.
And Ankit, you are definitely right when you talk about how everything is just stuck here in the middle. I do like dollar short, but you're right. Dollar is going to be stubbornly strong until we get some sort of catalyst that's going to weaken dollar, which might be something like, tariff, the US China tariff deals fall apart. That catalyst, this dollar needs a catalyst to push it out of the bottom of that range. If it's going to fall, it's going to come off of a catalyst. It's not just going to come off of regular trading because those yields are going to firm up. Those bond yields are going to firm up, which is going to hold that dollar up. I much prefer the yen. And I think the yen looks like a really great trade. Here's the problem. I don't have anything I want to buy against it. Maybe the pound, but you saw the pound chart. The pound chart is at best, holding where it is and not really going anywhere. Other than that, on a trend score, everything's in the middle. Velocity score, okay, what's moving right here, right now? We got the Aussie moving and we got the yen moving, which is, again, I like that yen. I would love to be long Aussie. And actually, I do like that Kiwi if it breaks out of that 2-month high base. But until then, here's my problem. I got one currency I want to trade. But remember, in a currency trade, I've got to pick another one to go long against it. And I just don't really like anything. So let's go in and take a look at a couple possible charts and trades and see if we can find something interesting for this week. I'm going to go ahead and start off with my favorite is going to be pound yen. Pound yen, taking a look at here on a daily chart, you can see that really over the past, past year, this has been very range bound. But you can see that there are these levels, and if we can identify these levels, you can see that there's some decent trading around these levels. And we're right at one of these levels here, where if we can break out of this 196, we do have a possible run all the way up to this 198. That's about a 1% move. That to me is worth going after. So the question is, when is it going to break out? What is the criteria we need to look for to break out? Me, I would much rather get long off of a pullback on a short-term chart. That's where I think I want to get in on the pound. And let me tell you why. Let me go back to the pound basket. So let's be really focused on these last couple days. So I'm going to go to this daily chart and let me focus on these days right here. Okay, these candles right here, you can see long upper wicks. Take a look at all of these long upper wicks on the pound. Do you know what that means? Anybody who tried to buy breakouts was immediately disappointed on that day. It pulled back. Almost every single day has a long upper shadow. So I'm not looking to be breaking or buying on high base breakouts. That's just, it's asking to be disappointed. What I really want to do is look at these long lower shadows because we're getting a lot of long lower shadows as well. Take a look at all of these here. I want to get on these long lower shadows to get a good price on the pound when it has these temporary pullbacks. You can see you're getting an opportunity almost every day on these long lower shadows to get a pullback. So what that means is that when I'm looking at pound yen, I don't want to be chasing a high base breakout or something like that. I really want to be getting in on the pullbacks when the pound is weak. This was a great opportunity to get in when the pound was weak. Great opportunity to get in when the pound was weak. I want to be looking to buy pullbacks on some shorter term charts because, again, I'm just asking to be disappointed if I'm chasing high base breakouts on pound. We're just getting too many long upper shadows. I want to see pullbacks. Next week, I would love to see a pullback on the pound the first day or two. Give me a great opportunity to go in and buy a bull pullback on a shorter time frame chart. The other currency cross I want to take a look at is dollar yen. Now, I would really want to focus on this. And I'm going to zoom in here. And I'm just going to hold my cursor over these candles. So this is Monday's candle. Monday's candle was a 1% move. So 144 pip move from top to bottom. That's a decent trade. The very next day was the exact opposite candle, almost 135, 140 pips from the open to the close. As you can see here, there's really good opportunity here, but there's not good opportunity for someone who's a trend trader waiting for it to make a run for 2 days, 5 days, 12 days. That's not where we are in pound yen. So if you are looking to be a trader, if you are looking to trade currencies and you admit, okay, there's no real strong trends here, then your next move is to move to what is the currency cross showing the most negative correlation and do some shorter term trading inside of that. I like this dollar yen. The next day, look at this. Just reverses everything that was made on Tuesday, another 1% move. And then here wasn't as big of a move, but you can see long upper shadow. There was a 1% move for sure from top to bottom. And then we got the continuation today. I continue to think that the dollar yen is going to be the best trading pair. And let's just even go back to last week. We did get 3 days of a run here, but take a look at this candle. You know, if you're just sitting there thinking, hey, this isn't really going to go anywhere in a trend, but I just want to buy weakness and sell strength, there's some really good opportunity here in dollar yen. If this is not your style of trading and you've never done this before, okay, this is where paper trading is going to be a great thing for you to do, to go in and develop these strategies. But if you are an experienced trader like this, I think you want to be looking at dollar yen as when it's having a run, I want to get ready to short. When it's falling apart, I want to get ready to buy. I think that's going to be a decent trade for the foreseeable future until we start to get some nice trends going on. What do you want to take a look at?
Hey Rob, well, I'm in the same boat as you. I think all those yen crosses, I think this is where it's kind of easier right now because everything else was so flat. You're essentially trading the yen, so it doesn't matter what you really pair against. We looked at how Swiss franc is sort of so sideways. I mean, take a look at our Swiss franc yen, right up against that resistance. So, when we take a look at the daily chart, like if my decision is based on that, I'm like, okay, well, that's a The third time that we are attempting to break that. This is purely a yen play. And I think that's where it doesn't matter what you pick. Euro yen, Rob, if you want to pull that up, looks very similar. So I think from a charting perspective, this is the only place that looks the best. I don't want to spend time looking at anything else because everything else, if I start to pair them, they won't give you a greatest looking chart setup. Now, when it comes to the dollar, I know we have been looking at a lot of dollar pairs like Aussie dollar, Kiwi dollar. If you really look at the dollar, this thing you can see that this thing is stalling at the resistance. So we talk about confirmation. I mean, Rob, if you want to highlight on Aussie dollar there, just let's go back on that chart and highlight the those two times those wicks on above the resistance. You can see both times it rejected. Now, I don't like that. I don't like to see that, especially if you're trying to go above that breakout. So I don't think the shorting the dollar right now against something is giving you the best breakout. I think there's definitely reversals coming off of it. And that's why the dollar basket is sort of holding on to that support. So I don't really love those dollar pairs, but yen pairs, as we looked at it, I think they look a lot better. So I think probably just see if we can get a more continuation pattern on those. So I think those are the ones that are up really moving. But outside of that, I'm not so interested in other currencies till I see that breakout off of those currency baskets.
You bring up so many great points, Ankit. And, we're looking at all these dollar charts and they just look phenomenal. But it's a very frustrating trade. And I'm going to go back to what I said with the pound is that if you're going after these as high base breakouts, breakouts where it's going to break out and run, I think you're playing the wrong game. If you are trying to play this as I want to get long this pair, but I want my entry to be a good entry because I think eventually we are going to get a breakout. And at some point, maybe in a week or two, we get the big actual breakout. Then I think you are looking to enter on these days. Enter on these pullbacks to where you get a decent cost basis. And now, let's say you entered back here. And, here we are 2 weeks later, you're still up on the trade. You're comfortably up on the trade. You're up like 1.2%. And now you can just be patient and wait for it to fail a couple times. It fails a couple times. And then all of a sudden, one day it has the breakout, runs to 62. You're in a really good spot. I don't hate trading these dollar pairs, but I do hate trading them on chasing breakouts. When they come back in, when a dollar has a day where it's super strong, those are the days I want to be looking to add into dollar crosses. So I think you're exactly right on that, Ankit. And I think just like the pound, you want to be getting in on days where the dollar is showing a lot of strength. Those are the days for entry. This hasn't changed much in the last couple of weeks. The range-bound condition continues. It's very, very important in these kind of markets to not chop up your account. This is a market that if you are actively trading it, and especially if you are doing 3 to 5 day trades, you are getting chopped up. What I mean is that you're just taking little losses, and your winners aren't really going anywhere, and it's frustrating. You need to recognize what kind of market we're in, and either need to not trade, or you need to go to some shorter time frames and look for some different styles of trading, because the trend trading that your system is probably built on is not working at the moment. It's very, very important for you to recognize when you are in a market regime that is not conducive to your success, and either stop trading, cut position sizes in half, do other things to not get so chopped up in this time period. Thank you for a great May, everyone. Everyone have a great weekend. Goodbye.